And good morning. This is an Elliott Wave intraday update for the S&P 500 and the NASDAQ 100 being recorded on Thursday, May the 29th at 8:15 a.m. Pacific Daylight Time. The reaction that we got off of yesterday's strong rally after the Fed court ruled and basically blocked all the tariffs and all the trade war, and everything's been blocked, uh, gave a very positive response from the markets. And I had initially reported this morning, or just showed this morning, how likely we were in minute wave three going up and minute wave three of, minuet wave three of minute wave five. Now, with the reaction continuing out as the US stocks opened, we saw the Dow go negative, the Russell go negative, the NASDAQ come way down, the S&P come down below the volatility trigger, below the put wall. It still is now below the put wall. They've tried to go up, they try to regain it, it fails, it comes back down, and then breaks back below the volatility trigger. So what I've done is I've gone over and I reviewed and I pulled out an alternate that I continue to have, but now it seems more appropriate to actually put it into place. And it doesn't necessarily upset the upside. It just shows that the third wave, the minute third wave, possibly completed at that overnight high that we saw at 6,008 in the ES. So what that would suggest now, even if I kept it as uh, sub minuet wave one, wave two has not become invalidated, but dropping down below the put wall and the volatility trigger, not once, but twice, but three times, has really kind of just changed it where it's like, what is up with the market? And switching it over keeps that bullish tone in the market. So we're still looking for a fifth wave up. We're still looking for a clean break above 6,000. But the one that now just on a gamma level and just on how traders trade perspective, I felt that, and as I mentioned again this morning, because of tomorrow's end of the month expiration, there remains heavy duty uh, resistance at 6,000. And now they went up there and gave it a look overnight, but they haven't pulled it through today, which during our options trading sessions hasn't gotten up there to really promote anything more serious about adjusting, covering, whatever. Now, we may do that tomorrow, but I don't think so. So again, my whole thought process is that the market likely is not going to really successfully push its way above 6,000 until June. Now, that starts on Monday. So I'm going to present what I got going on right now, and we're going to see if this actually is what plays out. So on the daily now, one, two, three. So prior, I had three here and four here, minute, three here, minute, four here. But I went back, I reviewed it, I thought, okay, it really fits both ways. So I'm showing it that it was minuet wave three that completed at the May 20th high, minuet wave four, which completed on the 23rd low, and then we just finished last night or overnight the minuet wave five to complete minute wave three. Now let me bring that down. Let's take a look on the hourly chart. And you can see it's still pretty clean. We can count it as five all the way up to that high. And I mean, I had some folks this morning and coming in and saying, I think 1-2-1-2. And I'm like, yep, that all works. But I can put it all with completing, putting that five there. and therefore we're in a wave two. And let's just take a look at this. Would we consider that if we were entering a third wave, which would become invalidated on a tick to 58.90, because wave two cannot go behind the starting point of wave one, then if it's not a wave two. So I've seen irregulars, but not in this direction. It would have to be up and then back down. So in the particular direction that the market is going, it cannot. It cannot overlap. So in other words, if we came down to here, we went back up, we went above that high, and then came all the way back down to C wave, yes, then it's an irregular. But down here, no, it would not be an irregular. It would be just a break, and therefore invalidate that previous count. Now, the strength of the selling, the persistence of the selling, the volume continuing to be low, continues to keep this not so much in a third wave, because again, in that third wave, I would be looking for an increase in volume. And even overnight, the one thing that hung in my mind was that this is not moving up on big volume. You would think there's like this big turn, but everybody's coming in and everybody's making adjustments and everybody's getting ready for this thing to just go to the moon. Now, other thing to consider, because everybody's like, oh, trade wars are done. The court has just blocked everything. So therefore, nothing's going to happen. And that's a positive for the market. In reality, it is not all done. The trade wars are not over. This now is going to have to work its way through the courts. So it's being appealed in the appellate court, and it likely will be presented to the Supreme Court to make a decision. So still, excuse me, the basis of it all is that the president doesn't have the constitutional authority to just blatantly pass out tariffs, to impose tariffs on anybody without congressional approval. So that's kind of, I think, the premise of what they're going on. It goes much deeper, and I suggest if you've not read any of the articles on what the court had to say, I would suggest doing so. But I want to keep in mind all of those factors that are going into what that rally is all about. And now add into the factors on why it probably is likely a minute fourth wave. So if that's the case, the fourth wave of one lesser degree bottomed at 57.60. Well, actually 57.56, excuse me. So we've got the possibility that this is an A, and I'm not even saying the A is done, but if it is at the low at 59.08, and we go back up in a B wave and come back down to a C wave, we're likely going to end up at 5,800 or down to that low at 57.60-ish. 382 puts us down at 56.75. And then still turn around and rally. But then the charge would be on based on something else that's going to either come out in terms of what tariffs are, in terms of what's happening within the government, or just a change of something which is going to bring that positivity back into the market. And it could be as simple as we clear the decks after the May expiration, that enough expires to bring in a more positive reaction from the market, and we kind of go up. Now, I'm actually thinking right now, we may still get that, but we're going to come down again. And then once we're done, then I think as we work towards the June expiration, which is June the 20th, there's just massive gamma levels from 4,000, 5,000, 6,000 in the SPX. And then several in between. But the massive ones there's the combined put calls, there's over 400,000 sitting at the strike 4,000 strike. There is over 600,000 sitting at the 5,000 strike, and there's over 450,000 sitting at the 6,000 strike. So that each one is going to present either support, stiff support, or really strong resistance up through June expiration. Now, on top of it, at the end of the month in June, we got the big, it seems big, but in terms of these other positions, I don't know, the JP Morgan collar, which is going to get rolled. So we've got a couple of gamma-wise, position-wise, options-wise, we have some larger things to deal with in the month of June. So again, it kind of makes sense that we're getting ready for the May expiration. And I actually was a little bit surprised at the depth that the market was selling off on the opening, but has really failed to reignite back to the upside. Now we're just kind of sitting still. So let's present it. Minute wave 3 finishing here on last night's highs. And what we got so far is possibly only wave A. But if I bring it down, let's take a look on the 15-minute chart and open it up a little bit so we can look inside. You can kind of see like 1, 2, 3, 4, 1, 2, 3, 4, although we got tons of overlap. So I'm thinking that when we got there, we have 5 down. In and of itself, I got another alternate count that could be triggering here. And that would be that at that end, that 6008, we had a big, big failure. So it turns into a 5th wave all the way up. And it's a sizable failure. I'm not going there. I'm not going there. But now that one still sits up on the shelf. But as an analyst, I'm usually going to have 2 or 3 alternate views against my preferred. So this one keeps the preferred in line. Just changes it a little bit, putting that minute 3rd wave here and the 4th wave still in progress. Now, I really can count this as 5 down. Once we got past here and we didn't get very far, and then we came back down, and the depth that we came back down changed it from being possibly A, B, and then we just had the 1, 2, 3, 4, 5 for C. That got all busted up. So it's now counting better as 5 waves down to this morning's low at 59.08. And then we're going to get an ABC up. I'm hoping we at least can get back maybe to 59.50, 382 for B wave, but we know that B waves can go further, so we have the additional resistance levels for a B wave or a wave 2. Both 49.46, 50, excuse me, 59.46, 59.58, 59.69. Those would be the levels coming back up. And then we come back down in a C wave, and eventually we go down and we start testing, if not close, around 57.60 to 50. Our first level, 58.06, 5800. But we have gamma levels at these, excuse me, at these points as well. And tomorrow is a little bit larger expiration. So I'm going to present this. I want to keep it in mind. I am actually, if I leave it as this alternate, we're still looking for stronger upside. And we're still looking for a break above 6,000, a substantial break above 6,000, and get us up to new all-time highs. All right. Now, moving averages haven't really budged too much, although we got the 8 really dropping, the 30 also rolling over. the 78, I mean, I changed those. So there's still the 30 and the 78, which were the 20 and the 50 is going flat, and the 200 is going flat right now. So we're going to kind of see how all this plays out. All right, let's go over and take a look at the NASDAQ because I had to make the same changes there as well. And here, same deal. Let me go out to my daily. So what I did is I moved the minute 3 from there to up, and I moved the minuet third from there all the way up to here. Both, they work. They seem a little bit more congruent. And this was a 4. And then we came up in the 5th, the minuet 5th, to finish the minute 3rd. And here in the NASDAQ, that got done at 21,858 or 859. And that was a clean break above 21,800, which if we would have continued, just pull back slightly, even 100, and then roll to the upside, but give it a punch to the upside. Didn't see any of that. Didn't see any of that. Just selling for the first hour, just selling. I'm like, oh, okay. This is interesting. So that's why I'm doing this. Now, let me bring it down to the hourly and let's kind of try to open it up a little bit. So again, 3. So this is 4 here. Where are you, 4? Let me move that up a little bit so we can see it in my charts. So basically, what we're saying is that if this is going to be a fourth wave coming in this direction, well, it can come down to the low of the fourth wave of 1 lesser degree. That's right here. And that window is right here. So, but 236 is 20,877. So we can kind of come in between 0.236 and 0.382 and still meet the requirement, not necessarily requirement, but what the guideline tells us, that this fourth wave can come all the way back down to 20,725-ish. So right now, on here, you can open this up, and you can be really hard pressed. You got 1, 2, and then what? 3, 4, and a 5, or 3, 4, and we get another leg down. Very possible. Drop it down to the 15 minutes. We get a little bit closer look to what we got going on. So this could be 1, 2, 3, 4, 5, 1, 2, 3, 4, and we come all the way back down and end up below 21,378 to finish the first 5, which would be an A wave. And then we rally in a B wave. So I've not marked this one because this one I think is still in motion. And you can see now we're beginning to turn lower yet again. So if we look for, let me just kind of, I gotta go, excuse me. I think we can get below 21,380, and our next support level is going to come in at 21,322. Now, just in terms of gamma levels, I think we have in the NASDAQ, I think I have a call, I do have some at 21,384, large gamma 1, and the call wall at 384. So see how close we got to it? We actually did come down and test it this morning. And now I think we come down and break it. We barely went through it at 380. So, and it bounced back pretty strongly, so it saved itself. But I think we could go down and break it. And that could shove us down further and then finish it. The A wave, and then get a B wave bounce and a C wave down. That would be under this alternate. But I'm going to take this one day at a time. There's so many things going on that are affecting the markets that to kind of say with certainty, this is what it is, this is what we got to do, I think it was a mistake. And I know a lot of you guys are You're more position type trading. You're trading options. You're trading and you're looking for different things to kind of happen. And how things are moving around changes that. And I understand that. But that's just frustrating for all of us. So let's see what we kind of get through. All right. So moving averages, you can see, at least on the 15-minute, the 20 is now broke. Actually, the 30 is now broken through the 78 and it's now heading down towards the 200. If I bring it back out to the hourly chart and we open it up, the 8 is again broken below the 30. And both are heading down towards the 78, which is basically now going flat at 21,480-ish. So let's see how this plays out today. And but I want to make sure that everybody was on board and saw what my thinking is and how I'm just putting up an alternate that makes a lot of sense and does cover us on this, what we're doing right now after this powerful rally. All right, I'm going to get this done, so I'm going to finish and get it posted. Next update will be the daily.